Hello and welcome to PropNX, the property podcast about all things related to the future of real estate. I'm delighted that you've joined me today. My name is Gavin Morgan, your host. If you'd like to know a little bit more about me, please check out www.propnx.com. That's PROPNX.com. Or drop me a line if you'd like to chat privately on gavinrmorgan@propnex.com. That's GAVINRMORGAN@propnex.com.
James McLean, thank you very much for joining PropNX, and a real pleasure to have you on the podcast.
Good to see you, Gav. Really good to see you.
No, and you too. And James, before we get on to today's topic, London, something I'm very excited to have the conversation about. I mean, one of the world's great business destinations with probably a more interesting future ahead of it than ever, based on goings on of the last 5 or 6 years. But most importantly, let's maybe start with an introduction to you, just what you're doing at the moment, before we get into that. Thank you.
Hi, Gav. So my background is 30 or so years in real estate. I started in residential sales in a town about 30 kilometers outside of London, in fact, near where I am now. And in 2000, I moved over to Hong Kong, where you and I met, of course. And I spent about 15 years across a blend of Jones Lang and CBRE, predominantly in the occupier tenant rep brokerage space, at a time on the transaction management space, but predominantly working with corporate occupiers, and some of those years competing against you, Gavin. I think we beat you all the time. But 2015, it felt the right time to bring the family to the UK, and I was fortunate enough to get a transfer with CB. And my focus now is to play a part to grow the occupier business across the UK. I don't operate as a broker anymore. There are better people to do that. But my role is fantastic because I get to speak to all sorts of occupiers, multinationals, big caps, small caps, and those occupiers operate out of various asset types. So predominantly offices, but industrial, retail, data centers, etc. So that the conversations I'm having with these occupiers all the time is really giving me a fantastic insight to the pulse of industry and the pulse of the future of our real estate industry.
Yeah, James, I'm delighted to have somebody with that breadth of experience for a conversation about London. I mean, I do think you have a unique perspective on it with that background. Start us off with how you're seeing the London market today, with a particular focus on vacancy, supply pipeline, etc. I mean, in the conversations that I've had over previous years with people who know the London market, they've talked about a narrow supply pipeline and the ability for values to be well supported in that market. How do you see it at the moment?
Surprisingly steady, not perhaps what you might read in the press, of course. Let me throw some statistics out there. Supply in core central London, 26 million square foot and steady. Vacancy is just under 9% and steady. Of course, some up and down short-term adjustments. There's about 30 million square foot of grade A office space under construction, which sounds a lot, but it's important to know that about 46% of that space is either already let, so the big skyscrapers that you see have already been taken up or under offer. So currently there's about 4 million square foot of space in the city that is under offer, which interestingly is about 10% above the 10-year average. So it's not all doom and gloom. And these are deals being done across various size types, a couple of thousand square foot in the West End, of course. But currently there are about 5 deals going through in central London. They're about 100,000 square foot and above, not least the 500,000 square foot in Panorama St. Paul's, which is under offer to HSBC, the headline deal at the moment. Take up broadly stable. Again, short term, a little bit below the average. And that take up is from all sorts of sectors. Banking and professional services, legal accounted for 25% of that total. Tech has obviously come off given what's going on in the tech sector. So, as I said, surprisingly stable. A few peaks and troughs, of course, along the way. And Gavin, let's not forget the flex market. In a subject dear to your heart. So there's about 350,000 square foot of equivalent flex deals done in central London so far. I believe that's the largest for a very, very long time. And that flex, we'll talk about it later, is driven by corporates not knowing what to do in the long term, wanting short-term accommodation to meet the demands of the return to the office mandates. And outside of traditional space, operator take-up is going to be about 1 million square foot in London this year. I know we're going to focus on London, but I like to look at the UK as a whole a little bit. And really interesting for me, what's going on in the other markets, Leeds, Manchester, Liverpool, Bristol, Birmingham, all the traditional cities that are driving huge amounts of take-up. An American bank, financial services organization out in the market in Manchester for 100,000 square foot. Lloyd's Banking Group have just committed 800 desks in Birmingham. There's some big occupiers out there, but the supply is not there. And interestingly, the rental growth is huge in those markets. So in Leeds, Manchester, and Liverpool, rental growth so far this year has outstripped Paris, Berlin, and Milan. Markets that you'd think would be right up there in rental growth, but not so. So I think that's
pretty amazing. Yeah, pretty amazing statistics. That's really encouraging. And do you see that? As we're talking about demand, and look, thank you for such a comprehensive picture of how things have been going. As I said, encouraging. Do you think that it will be sustained moving forward? You referenced a lot of finance sector. And just generally speaking, James, there are a lot of people are watching London closely. I personally think London will be successful for a long time beyond our careers. What do you think? What do we see from a demand and supply point of view in the next wave beyond what you're talking about that generates the most significant activity in the market? And please reference the regions again if you'd like to as well. London and the regions.
Yeah, I like to promote the regions a lot. My role covers the whole of the UK, and I get to talk to companies that operate in the UK, and we look at it as a whole. Another New York financial organization has 5,000 people on the south coast of the UK. These are big markets. So future demand, I'm going to come back later on to what's changing in the market, and there's a lot. But future demand, look, the UK and London particularly is always going to be a global market. Always has been, always will be. But I'm also really interested, and I'm learning about the impact on AI. The metaverse was a buzzword that's kind of come and gone, in my view. But AI is something that is on the tip of everyone's tongue right now, and everyone is wanting to understand what it means to their business and therefore the impact on real estate. So we're just starting that journey ourselves. I think the sectors, if I break down an answer to your question, the sectors is a good way of looking at it. Look at F&PS, or financial and professional services. When you were in London, Gavin, Brexit was the talk of the town. London's fought that off handsomely, and some. Still the biggest insurance market in the world. It's the biggest Forex trading market in the world. If I'm not mistaken, New York, Singapore, and Hong Kong combined is still not as big as London. And that's going to continue. Big tech, massive driver over the last few years. We all know what's going on in advertising revenues. So I think that's tailed off significantly. And in London, big tech companies are carrying about a 15% vacancy across their portfolio. and that's a correction that needs to resolve itself. Legal, of course, we all know what's going on in the British legal system, and there are some big deals going on right now. Devoirs and Plimpton have just taken on 80,000 square foot, about a 30% increase in their footprint in London, which testaments to the demand. But I think the most exciting sector, Gavin, is life sciences. I really do, and we'll talk about that in a second.
Yeah.
In the UK, it's got 300,000 people, 94 billion in revenues each year, about a 10% increase year on year, and it is the market to track. Our forecasts are that there will need to be a 20% increase in real estate year on year just to meet up demand. And a lot of that does happen in London. You'll be familiar, I'm sure, with the Golden Triangle. Which
I am, but please, just for our listeners, James, just a quick definition.
So for those that are not aware, the Golden Triangle, so-called Golden Triangle, covers the London, Oxford, and Cambridge markets. So that life science hub. And another interesting statistic which impacts or illustrates the potential impact of that market. Currently, Gavin, there's 385,000 square foot of available lab space in the Golden Triangle, and our calculations are there's demand for 2.2 million square foot.
Wow, a property owner's dream.
Absolutely. And you've got property owners like Canary Wharf that are trying to react to that. We all have read about Canary Wharf, HSBC, and others, and they're reacting to that demand and the changing landscape of Canary Wharf by focusing on life sciences. And they have just secured planning permission for a 28-story, 825,000 square foot vertical tower, creating a first-of-its-kind campus focused purely on life sciences, hoping and built to be Europe's largest life science facility. So to answer your question, Gavin, life sciences, I was a developer, I'd focus on that, and I'd focus on meeting that demand, the imbalance of demand in the Golden Triangle. But we also talk about the Golden Triangle a lot. Manchester has a significant life science sector that is thriving as well, but that's the main focus right now.
Okay. Now that's James, the focus on life sciences is really interesting. You don't hear that, or certainly I don't hear that come up in a lot of the conversations that we're having on PropNX or anywhere else. And it is one of the biggest growing sectors all around the world. And I know also a sector that has been growing rapidly in London, certainly since I was back there, 7 or 8 years ago. And I remember it was relatively mature, I think, in its growth at that point. And it sounds like that just great ownership has continued in that sector, and that it's continued to develop, and of course it's critical in many more ways other than just from a business perspective that remains an important sector in that economy.
Absolutely.
So yeah, go ahead, please.
The weekend's Financial Times newspaper in London had it was a whole page spread on the government's new agency, copied or modeled on US agency, but It's called the Advanced Research and Invention Agency, ARIA for short. I'll go with ARIA because that's easier. But that's a huge investment. That's £800 million to be invested over the next 4 years on high reward research. So each investment director has a budget of £50 million, and they are told to go and take bold, not safe bets focused on the life sciences and AI sectors. This is a huge investment, and it is definitely going to fuel future growth in that sector.
Yeah, I mean, just one to watch, and like I said, great to have that highlighted, because it's not a common feature on the conversation in PropNX. James, another thing that I wanted to talk to you about, knowing that the United Kingdom, particularly based around London, has been such a leader in sustainability as it's deployed in real estate and as it's consumed by real estate users as well as technology. So maybe just to frame that conversation, what do owners need to do, in your opinion, to appropriately meet tenants' future needs, and smooth the path to facilitate the type of take-up that you're talking about as it relates to, let's focus on sustainability now, and we can maybe get to technology if we've time at the end of the conversation.
Sure. You and I have done this a long time, and I've never seen a multi-layered structural change in the way that organizations are needing to occupy real estate. Again, we can talk about it later on, but just think about what's gone on in the last few years, and I will get to answer your question, Kevin. Think about what's gone on in the last 5 years. Brexit, COVID, ESG, net zero objectives coming to the fore, environmental stuff that I'm going to talk about in a second. In the last few years, focus on OPEX and CAPEX. Again, think for a second. We noticed a trend for corporate real estate executives to report into HR people to address the direct correlation between real estate and people.
Right.
And now that change has changed. That structure has changed to focus on capital. So most corporate real estate executives now report into a CFO type organization. So cost is huge. Return to the office post-COVID, war for talent, cost of living, and your favorite subject, flex. But this ESG drive is really fascinating, and it's definitely number one, if not number two after cost, that every organization is wanting to talk about. And Gavin, your listeners around the world may or may not be aware of a new piece of legislation called MEES, Minimum Energy Efficient Standard.
No, I certainly haven't. So please educate us a little bit further on that, James.
Well, you're gonna test my own knowledge on that, Gavin. But so
I'm not apologizing.
So, but my knowledge is limited, but everyone else's knowledge is limited, and this is something that worries me. So look, whilst every organization is signed up to becoming net zero by 2030 or 2040, whatever we all know about, in April of 2023, it is made all commercial property, so not residential, a requirement to hold a valid EPC certificate. So the environmental credentials and operation of that building. From April 2023, that building needs to be EPC certificate or rated E or above. In 2027, that moves up to C, and in 2030 to B. And this is all about, irrelevant of when the building was built, irrelevant of when the tenant occupied the building. It's a little unclear about what owner-occupiers need to do, by the way, but this is about tenanted space. Effectively makes it illegal to renew leases, and the legislation is looking like by 2030 to make it illegal to enter into new leases post 2030 unless your building has a EPC certificate or B or above. Now, the new stock in London and the regional markets will comply with that certificate, but many of them won't. We did a survey a few years ago, and we estimated by 2030, around 70% of the existing office stock in central London will not be compliant with the new legislation. That's a huge structural change. So you've got the organizations that are saying that they need to reduce the emissions and everything else on their own space, to reduce embedded carbon on fit-outs and reinstatement or renovation on existing space. But you've got government legislation changing the way organizations can occupy space. So the favorite phrase that I know you love to talk about, flight to quality, that is definitely happening right now, because you're not going to move into a brand new building that in, let's face it, 7 years, you're really not going to be able to renew the lease on. Therefore, if you're looking to spread the capex over more than 7 years, you have no choice but to go to a MEES compliant building.
And James, did you say that applies to residential as well as commercial? No, it's not. Okay. Well, you just frightened me to death there, so I'm glad to hear a no.
Look, it'll definitely happen. It'll definitely happen, and there is talk about it.
But I'm sorry,
this
this is super, really interesting. So does that mean, so right now it would appear that owners of real estate that can't produce a B are going to need to, over a period of years, retrofit features into the building that will eventually enable it to get to B, or demolish and rebuild, or something like that? Is that correct?
Absolutely. That is a correct summary of the situation.
Wow. Okay.
Yeah. And the research that I talked about, 70% of buildings by 2030 will be compliant, is based on the rate at which the construction industry is able to support the targets. There's only a certain amount of construction industry capacity. So it's a really important issue. So we are working with many organizations to do an audit of, if you've got 20 locations across the UK, how does your building meet up to current and future EP standards? And does that change your real estate strategy over the next 5-10 years' time? And the answer is it does. The reality is things like return to the office, cost, et cetera, seems to be taking a higher priority. We're working very hard with our clients and the industry to say, guys, let's not kick the can down the road too long.
Well, James, you're right. James, the valuation implications of that legislation will be enormous. And now, by the way, it's not exclusive to London and the UK. There's similar legislation in New York City, for example, that's tacking in the same direction. But the way that the valuation industry and the investment valuation, the implications are enormous.
But it plays into that. I think it's fascinating, and I genuinely feel it's fascinating, because it plays into the structural change in the way that the real estate markets operate. By that I mean, whether you believe it or not, obviously I work in the office real estate industry, so I don't believe it. But will people need the amount of offices that they did historically? Do they all need to be in central London, or will companies relocate to Manchester, Bristol, which are lower cost and more importantly attract a different type of worker? And therefore, will many of the lower grade buildings turn into alternative uses? Residential, of course, being the obvious one, or last mile logistics being the other. But at a time when you've got a repositioning of the retail, shopping centres also going into residential, is there too much supply against the residential demand? I don't know the answer, but it's fascinating to look at all these things coming together.
Well, it is. And, James, a couple of things to say to that. Thank you. My last question for you was going to be what London, what does it need to do to be the preeminent market in real estate moving forward? And you've answered a big chunk of that with some of the initiatives that you've talked about that are going to be in place and at some pace in London and the UK moving forward. But it's also very positive, just pivoting to something very, very positive for people looking at careers in real estate and the construction industry, because there's been a lot of talk about technology and automation taking roles out of various different marketplaces, including real estate. But when you look at the way that the industry is going to need to pivot, and you touched on a really interesting and relevant point just last there, the way that people will use real estate and the way that owners are going to need to set real estate up in the future will be quite different, I think, to how it's been in the past. So there's an awful lot of work and thought to go into that, in addition to preparing real estate to be able to meet critical needs, such as the ones that you've addressed. So the need for talent, and talent at volume in the industry, I think, is secure moving forward. And it's how to, really integrate technology and new trends and needs in amongst all of that to make what we've talked about happen is critical. And I still think that the most exciting time for us in the industry is the time ahead, particularly for guys like you and I who've had a good long period of time in the industry. We're finally coming to a point where it's becoming it's iterating really quickly and it's all very interesting. It's hard to say say that of the real estate industry generally over the last 20 or 30 years. So look, I think sort of finishing up, I mean, this has been a really interesting conversation. It's very positive in London. It's great to hear that. Is there anything that you would like to predict that you think will happen in the next sort of 3 or 4 years in the London or the UK market beyond what we've talked about that you think will be transformational for that market?
I am going to be passionate again about the regional markets. We've talked about cost. It's pretty obvious, London over other markets. We've talked about ESG and the drive of MEES, and 70% of buildings in London might not. Will that drive organizations that we've already seen move out into other regions? We've talked about talent. HSBC moving a significant portion of their tech business to Birmingham. Goldman Sachs doing the same. We've talked about a little bit about the demand change from organizations to come up with something that's different. We've talked a little bit about cost of living. Not much, actually. This is a really interesting point. And I'm not anti-London, far from it. It's still the biggest market and will continue to be so. But one of the things that I talk about to clients is this cost of living and the challenges for organizations. It costs someone £30 or so, $30 to get into work each day. £10 by the time you've been to Pret, that's £40. Right now that's a lot of money. And will people want to move somewhere else? Some people definitely will do. So I think the structural change will be AI. And access to talent, cost saving, etc., around reviewing how much space is still required in the core markets in London.
Okay, well, James, thank you for that. And thank you for joining us today on PropNX for what I think has been an incredibly interesting conversation. Great to hear the positivity about London and the UK. And I can't wait to watch all of this unfold as we continue to connect moving forward. Thank you again for joining us today on PropNX.
Thanks, Gavin. Appreciate it.
So that's a wrap. It just leaves it for me now to thank you very much for joining us today on the PropNX podcast. And I hope that you'll be able to tune in again to a future show as the conversations develop. If you'd like to contact me, please drop me a note on gavinrmorgan@propnx.com, or take a look on the website at www.propnex.com. Thanks again for joining us today, and I hope to see you on a future podcast. Goodbye.